Hey, how's everyone? Hope you had a good weekend. Despite of what's happening around the world, I have to emphasize one point that I have made before, that every single trading decision that I have made has absolutely nothing to do with my perspective on what's happening around the world. It's purely based on the chart analysis, because I'm a strong believer of everything's being reflected in the price already. Everything has been priced in already. Okay, now I would like to share with you my trades during the past week and the reasons behind that. Actually, from Monday to Wednesday, nothing too much happened, and I didn't spot any buying signals. And then on Thursday, I guess we all know what's happened on Thursday. That's the day of Russia's invasion into Ukraine, and the market has been through a roller coaster. So on the Bitcoin, actually, before this week, I had 0 position in. And then you can see that on Thursday, on the 4-hour candlestick, there's actually before Thursday, there was a bottom divergence there. And then on Thursday, the bottom structure formed. And then I remember that I mentioned to you before that it's not that we have to act on every bottom structure that is formed. When a bottom structure is formed, we need to evaluate on a daily time frame whether this bottom structure triggered a rebound. Is it possible to break out any of the short-term trend or long-term trend? Let's take a look. So now the bottom structure is formed on 4-hour candlestick. So the 4-hour candlesticks normally can trigger a rebound for about 4 days for the Bitcoin. Then I don't mean that after 4 days the market will not rebound anymore. It's just that this bottom structure at 4-hour candles can only do that much. And after 4 days, whether the market will go up again or go down has nothing to do with this bottom structure anymore. Okay, if you understand what I mean. So let's take a look whether this 4-hour bottom structure can trigger a rebound for the price to stand above either short-term or long-term trend on a daily time frame. So let's take a look at the daily time frame. So now we're at the daily time frame. This is on Thursday, when the bottom structure at 4-hour time frame has formed. So we can take a look and forecast whether a 4 days rebound can lead us to break out either short-term or long-term trend. So I would say that at that time, on Thursday, when we look at this candlestick, the position, we will say, okay, 4 days, I think there's a high possibility that the price can stand above the short-term trend. But for the long-term trend, I do not think there's a high probability. So short-term trend for me stands for 40% of the position size, and the long-term trend stands for 60% of the position size. Okay, so with that in mind, I bought 40% of the position on the Bitcoin with the hope that the price can stand above short-term trend after a few days. So if the price can go above the short-term trend, that means that my purchase is correct. Okay. Then again, I always mention a corrective measure. What would it be? In theory, if I buy at 4 hours bottom structure, then in theory, if the price creates new low, I will need to sell this 40%. However, I mentioned that I expect that the rebound triggered by 4 hours can last or can only have the impact on the next 4 days. So now we are already 1 day, 2 days. So if with another 2 days, if the price still cannot stand above the short-term trend, I may consider to sell. So that means, for example, now is day 1 here, day 2 rebound here, and then if day 3 and day 4 cannot go above the short-term trend, I may consider to sell here. And then if the price go above the short-term trend again, I will buy 40% again. And if the price goes down, I will wait for another chance. I think there will be another chance of the bottom structure. Okay, so that's on the Bitcoin. So now let's take a look at the US stock market. Now we're looking at S&P 500 daily time frame. On this day, February 23rd, which is Wednesday, as you can see below that I twittered, tomorrow could be an important day. Okay, I not only twittered, I also posted a video, if I remember, on February 23rd, Wednesday, because on that day, I mentioned that the NASDAQ100, Dow Jones, and S&P 500, all 3 indexes are finally synergized in daily candles with bottom divergence. And this is the first time since market declines from the previous high, we may have a bottom structure coming at any time from Thursday onwards. That is why I mentioned on my Twitter and also made a video on Wednesday. Another reason why I have to mention on Wednesday through both Twitter and YouTube video is because on Wednesday we're looking at here, and if you remember, I talked about the TD sequential 9 before, and by the closing of Wednesday we're looking at 8. Very often the 9 can be the final candlestick before the price turn. But I have to say it's very often. It doesn't mean every time, but it's the time we should pay attention to. So I was thinking on Wednesday that since this is the first time since the market dropped from the previous high, and all 3 indexes has the bottom divergence, and together with the 9 on Thursday, there is possibility that the market can be bottoming out. It will be an important day to watch. That's why I give out the alert on Wednesday. And by saying that, I myself was prepared to buy on Thursday if I spot any signals on that day. And now we're looking at S&P 500 1-hour time frame. So this is the closing of Wednesday, February the 23rd. We can see by closing on Wednesday on the 1-hour time frame, there was a TD sequential 8. So meaning that the first hour on February 24, Thursday, will be most likely a 9 if the market does not open high. So honestly, I was quite excited on Wednesday because I see these opportunities that could happen on Thursday, and I was ready to buy if I see a signal on Thursday. So the Thursday, we know that market opened very low in the US. Yeah, actually it's everywhere. I had in mind that on the daily chart, we have the bottom divergence. So the bottom structure can be formed at any time. And then on top of that, that on a daily time frame, Thursday will be a 9. So I was thinking I should buy on this day. And then on this day, I should find a good time spot for me to buy in. And then the 1 hour, the TD sequential 9, low 9, can be a time spot to try. So I did buy because I really see this as a very good opportunity since the market started correction from the previous high. At least this is the first time I see such an opportunity since the market started correction. I cannot let it go. I just cannot let it go. So I bought. But how much I bought? Given that the market was still under a big uncertainty, And on top of that, normally I only buy when a bottom structure is confirmed. Okay, so at this 9, the bottom structure was not confirmed yet, but it's just a good opportunity that I spot I do not want to miss. So I have decided to buy on Thursday. Sorry, it's a bit messy here. At this low 9, but only 40% of the position. Okay, because I don't have the gut to buy 100%, and 40% is because I don't want to miss this best opportunity. So it may be the bottom candlestick that I buy in. I do not want to miss it, but somehow psychologically, by only getting 40% of the position can make me feel ease. Okay, and in the meantime, I have in mind that because you see here is, I said already, there's a bottom divergence and bottom structure can form at any time. So my plan was to buy 40% here, like I bought on Thursday. And then my plan was when on the daily time frame a bottom structure is formed, I buy the rest of 60%. Okay, and then on Friday, the next day, with another strong market rebound, actually the bottom structure is formed. Okay, bottom structure, it's not bullshit, it's bottom structure. Okay, so here. This is on Friday. So according to my rule, normally when I spot a bottom structure, I will act on the beginning of the next cycle. So that means on Monday, if the market doesn't drop dramatically and break the bottom structure, I will buy the rest of the 60% of position. Let me just clear this mess here. So I have to mention one thing here is that the TD sequential 9 is not and should not be the sole reason for any action, either buy or selling. Okay, because TD sequential 9 can be a good reference for the price turn. However, as you can see here, for example, the 9 doesn't cause a price turn here, no. Okay, so again, the TD sequential 9 should not be a sole reason for you to act. So for normal buying and selling decision, the trend, long-term trend and short-term trend can be the criteria. But you can see that when the price breaks out through either short-term or long-term trend, rebound could have already started for a while. And then, so normally the action based on the trends are we called right side trade. The right side trade, the advantage is that you have more confirmation. And another type of action is when we act upon a confirmation of a bottom structure like this candlestick. So this is certainly a better price point than the trends. So we call this a left side trading because you can buy at a better price point. And then on top of that, I have another type of trading that's called double left side trading. What is that? Actually, I'm using the bottom divergence or top divergence plus the sequential 9. Divergence, you know, This is called divergence. The price creates a new lower low, but not the MACD. So this is already a bottom divergence, and then plus a sequential line. As I said, sequential line should never be used as a sole reason for trading. This can be used only as a reference, but however, sometimes when you combine the bottom or top divergence plus the sequential line, this can give you a perfect buying price point or selling price point. Okay, but I have to tell you very clearly that it is not something that you should be hoping for all the time, because you need some luck to get this kind of pattern. It doesn't happen all the time, and in a trading, we should never chase perfection. We chase probability, but we don't chase perfection. So I bought at the first hour, Thursday here. I bought at a very good price, my 40%. And then on Monday, I'm planning to buy the rest of 60% if the price doesn't turn, back down. And then my judgment for the moment will be that since the bottom structure on the daily time frame has formed, there's a high probability that the price can break out through both long-term and short-term trend. This is my expectation. However, corrective measure, we should never forget that. So here we can see the bottom divergence, and there's not big room for the bottom divergence to disappear. Okay? If the MACD creates new low, then the bottom divergence disappear. And for this to happen, the price doesn't need to drop a lot. So I will wait for the bottom divergence to disappear to correct my mistake of buying here. So this will be my corrective measure. And I don't think for me it will be a big loss. Anyways, when I spot a very good point, I just cannot miss it. We cannot miss any of the opportunity that the market offers us. We cannot always wait for the next one and next one. Of course, if we have the next bottom structure or the third bottom structure, it will be having higher effectiveness. But what if there isn't any second one or third one? I always mention that. So when we spot the first good one, we should act. And then with the corrective measure, we should not be worried. Okay, so that's all what I would like to share today. Thanks for watching. Peace.